Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Matt Battiali, and we're going to be focusing a bit more on the copper sector, simply because I want to get Matt's thoughts on why copper has dropped so much after poking its head above $5 back in May, and the stocks also fading lower with the underlying copper price here. Matt is the editor of The New Energy Investor, published under the Mangrove Investor website, which we will link to in the show notes. Matt, we look at the copper price right now. Let's call it 416. It was dropping earlier today, still is down for the day, but boy, oh boy, it's really looking like copper could drop into the $3 region here. We're already at prices from back in early April after that pretty amazing run, April through most of May when copper went as high as 520. Ever since then, outside of a little bounce at the very beginning of July, copper's been almost going straight down. Matt, why is copper going down? Is this telling you that, who knows, maybe a recession's around the corner? Maybe we truly are having a global slowdown.
Yeah, thanks for having me back, guys. That's a great question. I mean, the copper price is down 18% from its high. I mean, that is a pretty significant correction in price. And I think it does speak to global economic issues. As we are talking offline earlier, I mentioned the fact that I still keep one eye on energy prices and a crude shipment from Brent, so that the European benchmark Brent crude just sold at a pretty significant discount to the spot price. So somebody was able to buy a tanker of Brent crude, at a 5 to 10% discount on the spot. So it's not just copper. We're seeing prices decline on some of these critical economic commodities like energy and like copper. So yeah, I don't know if we can read all the way into recession, but certainly things seem to be slowing down globally.
Well, and Matt, people call copper Dr. Copper because it is an indicator of how healthy the underlying economic growth is going to be. Do you think this is also tied into the concerns about China? What about the rest of the world that still needs electricity and still developing? What's the balance between, I guess, the US focus, the China focus, and the rest of the world needing more copper?
Yeah, I think this is definitely a reflection on things happening in China. We in the context of commodities, I always think of China as the mouth of the world. So when you're producing commodities, whether it's copper, nickel, iron, base metals, coal, this stuff all ends up going to China one way or another. They have spent the last 25 years building out the infrastructure to process the ore, to turn the raw metal into a usable form, and then they're able to capture the economics on that and ship the semi-made material out to then the end user. So when China buys less copper, the copper price gets clobbered. And I think that's what we're seeing here. I don't think this is a case where you have a backlog. Like sometimes China will overbuy a commodity when it's cheap. I don't think that's what we're seeing here. I just think we see a relative slowdown. Then I China's opaque when it comes to Western analysts. There are very few reliable sources of information on what's actually happening inside of China. I use supply and demand data of commodities really to kind of to gauge my thoughts on what's happening in China. And the problem with that is it's backward looking, so it's not great going forward to forecast what's happening. One thing that we know about copper is that the supply demand math says that copper won't stay cheap if it gets cheap, and it's going to be very difficult for it to get cheap going forward. So when you look back at kind of the important milestones, that $4.25 point that copper just went through, that was a price that I see resistance. The next one down, I'll be looking, yeah, it'll be under, if it breaks under $4, that would be a pretty significant price. We've seen it bounce off of that before.
Matt, when we look at some of the copper producers, then have you dove into any of the major producers, any of these mines that are up and running to get an assessment of how healthy these companies are at, let's say, these $4 and change prices?
I haven't done that breakdown. They're going to be decent. Remember, $4, all of 2023, the copper price averaged three and change, somewhere around 380, 375. So even at $4, like this first half of 2024, these guys printed money. So I don't think it's gonna be significantly negative for them. They're probably going to have to modify their forecasts, assuming that this decline continues. But I don't think we're going to see big misses on earnings, and certainly not for the year because the first half was so strong. But no, I haven't. I probably ought to go back and look at the producers. I just haven't yet.
Well, Matt, one story that caught my eye that came out, I think, a week or two ago was talking about Chile's copper miners. And Chile is such a huge producer of copper, but they were talking about the need for water, which is always an issue in whether it's Argentina, Chile, Peru. South America has water concerns, and they're doing desalination plants. But they were talking about the energy that's needed to even do copper mining rising by 31% over the next 10 years. And they were saying that it's even going to be more extreme in certain provinces, going from 4.9% of the electricity consumption to 44% in 2034. I don't know where they get the projections from, but the idea being you're going to need a lot more energy to even be able to produce copper so that you can provide energy to people. It seems like kind of a conundrum.
Yeah, I mean, the water issue is pretty significant, and I've looked into desalination plants in the past, and they are incredibly energy intensive. You're pushing salt water through a membrane to get the salt out, and it's just a very energy intensive process. So yeah, I mean, it reminds me a little bit of oil sands where you've got to burn natural gas to heat steam to melt tar to break it into oil. And so it's relatively energy intensive to get oil out of the ground. But if you want to move electrons from point A to point B in a motor, you have to have copper. You can't substitute another metal there. So we just have to get it. The question is, what will this do to the economics of those mines? And will we see mines in other places that then can outcompete on economics? Congo is moving very quickly into that space of being a major copper producer. You know, the other interesting thing to me is that Chile has they have such an arm lock on copper production. I saw a map the other day of the major copper mines, and they're basically in two countries in South America. And this is what OPEC did. When OPEC felt like their market share was in jeopardy, they basically picked and chose who they were going to ship oil to. I worry about politicians using commodities, in this case copper, again as a cudgel to do what they want.
Oh, that's always a potential. But circling back to kind of the companies here, I did a quick search here and just some of the recent companies that have even reported earnings. Southern Copper, at least Q1 earnings, they had very strong net income. The Freeport had strong net income. BHP, these companies are making money, which also I think is leading some of these gold majors to look to copper as a diversification tool. You would think that would be a nice kick to the market because of the fact that large mining companies that aren't or weren't heavy in copper are looking into copper. How significant could this shift be with gold companies now focusing on copper plays?
I mean, Newmont always had a pretty solid contribution to its revenue from copper because a lot of their production was copper gold. And interesting that Q1 was so strong because Q1 was less than $4 a pound on the spot price. So unless these guys have hedged, and I doubt they hedged more than $4, Q2 numbers should be through the roof. So if the price continues to drop, we're going to see Q3 comparable to Q1. which, like you said, still generating lots of free cash flow in the majors. We have this crazy combination right now of gold at all-time highs and copper at, pretty significant high prices. I mean, the copper price in the first half of this year was higher than it's been since 2022, the end of 2022. So you should have these companies generating record profits, even with the inflation in energy and the inflation in concrete and steel. You should still see these mining companies generating lots of free cash flow. So there should be the opportunity for acquisitions and M&A. And it sensibly, we can't predict what the gold price is going to be, but certainly the math for copper stands out that it supports a copper price that will be higher for longer. I would expect to see more M&A, especially among some of the projects that aren't in production yet, or are where you have a company that has a decent project, but its share price is weak because it's not getting the investor support. There should be targets of opportunity out there for some of these majors that were gold focused but looking to diversify. But I also think that there will be base metal majors that don't mind a little gold.
Well, Matt, just to that point about M&A, which I'm glad you brought up, because if you think about how many development projects there are in the copper universe, there are dozens and dozens of them sitting out there on the sales rack, not really going anywhere. They can't move forward maybe with the capital stack they need to build it on their own, so they really need that takeout or that partner. Would you rather see some of these companies have a JV where they kind of do a 50-50 or more of a 70-30 where the major takes the lion's share of the heavy lifting, but the junior's taken along for the ride? Or would you rather just see some all-out consolidation where we see more of these development projects bought up? And why isn't that happening with such a robust demand side for copper and the prices at a discount where these big companies could pick up the little guys on the cheap?
Yeah, I know. I would much rather look. I'm in favor of seeing fewer management teams. Those are the cost. Those are they're non-revenue generating. So I'd much rather see majors come in and take some of these companies out entirely. Capital is difficult right now, right? We're in a high interest rate environment, so it's very hard to get decent terms if you want to build something out. So if you've got a 3-year path to revenue, that's going to be prohibitive in terms of borrowing capital. And if you're trying to raise that cash, it's almost impossible. There just isn't that interest among investors right now to do it. So I see single asset development as probably the most challenging place to be right now in mining. You're in that construction orphan phase, but in this case, you could be even pre-construction orphan. From an investor's point of view, historically, when you were developing a project, nothing that you did would generate interest in your share price because you're not bringing anything new and exciting to the table for investors. You're just checking boxes. And so your share price in that period of exploration peaked as high as it was going to go until you got to production and revenue. And so if you miss checking a box, if there's a delay in a permit, if something, a piece of equipment that you needed is going to take an extra 3 months or 6 months, which we see all the time, investors are going to sell your shares. And so it's a grind. And if you have to raise money, you're diluting your existing shareholders. They're going to be pissed. They're going to sell your stock. So it's a situation where there are fewer buyers than sellers. And so majors can be persnickety. But on the flip side, I got to tell you, the decision making on the majors, these guys it's like the barbell syndrome. You have, on the one hand, companies that are way too cautious and they take too much time vetting projects. And so the time frame for an acquisition can take months or years. Or you have the opposite side where you have an acquisition that happens so quickly that maybe they didn't do the due diligence that they should have done. And so they paid for a 3 million ounce gold deposit, even though there were only 1 million ounces there. and then find out that they can't, there's that extra 2 million ounces that they thought was there isn't. So in this case, we're seeing it's a very slow process for acquisitions, I think. But I really would like to see some people start to pull triggers.
Does copper being a critical mineral classified by a lot of governments change anything in the market? Have you seen anything constructive that has come out of that classification?
Yeah, you can buy an EV with a bigger tax break these days.
Hey, that's something.
That's something, but has that trickled down in mining yet? I don't think so. I don't think I've seen anything that has happened to date that wouldn't have happened prior to that, except maybe marketing. Every junior with a patch of grass in Canada or the US, they're talking about critical minerals. They're certainly in Canada, you have the critical mineral flow through program. I don't think that's incentivized anybody to raise more money.
Yeah, Matt, I think you're right. I think it's helped on the marketing side of things more than anything. But hey, who knows? Maybe governments will be more friendly and more receptive to permitting. Maybe permitting timelines will decrease. It's not a trend that we have seen, but if any advancements in that side can happen, man, oh man, that could really help. Plus, there just needs to be more funding available to these companies, to these developers to actually get some of these assets built. When that will come, who knows? It's probably at a higher copper price than we're at right now. Matt, always interesting chatting with you. Thank you very much for your time. Again, I will post a link to the Mangrove Investor website in the show notes. We'll chat again in another couple weeks, Matt. Thank you.